Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Egld. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be linked in the top right hand corner of the video. Now, if you have done that, great. There's also one more thing that I want to mention. I have two donation links down below in the description. If you want to support the Ukrainian refugees, feel free to do so going to the official websites that I linked down below. The funds do not go through me in any sort of way. Thank you all for supporting Ukraine and thank you all for supporting the channel. Now let's get on with the TA. So jumping into the daily chart, we have two Fibonacci retracements on the chart. Obviously, one is quite large and the other one is a bit smaller. So the large one here has the swing high as the November all-time high, and the swing low is the low that we printed here in June. So we're presuming that this is the low of this bear market, which, if I'm being honest with you, I don't think that is entirely true, because there is a very strong possibility that we do lose this low, which would be quite negative. But if Bitcoin does see a strong drop in the middle of September, then altcoins are going to bleed. Now, what we could also do is we could set up a different Fibonacci retracement here. So I'm going to take this swing high in March and the swing low in January, and we're going to see what the 1.618 technical target was. Okay, so the technical target here was all the way down at $72. So yeah, we've actually went quite low here. So we dropped all the way down to the 2.272. So yeah, this fib isn't really going to be that useful. So we're just going to stick with this larger fib, and we almost ran into the 236 here, which is the red level. As you can see on this large fib, we ran into the 236 and we are retracing down, and we're coming back down potentially to where we started retracing from, which is the low that we printed on June 13th. And we have a pattern actually that is suggesting that we could go all the way down there, but this is typical for assets to start retracing to the upside after a capitulation, and then they start coming back down, retracing to the downside to where they started the move in the beginning. And from there, you continue on, or you create a lower low, which would be more bearish, if I'm being honest with you. But let's hope that it doesn't come to that. But if it does, be ready with some buy limit orders below $30, guys. So taking a look at the smaller Fibonacci retracement. So here I have the swing low set up over here at June 30th, and the swing high is currently set up here on August 10th. As you can see, from there we started pulling back down. We bounced from the 786, had a retracement to the 20 EMA, another bounce from the 786, another retracement to the 20 EMA, rejection from there, and now we're bouncing off the 786 once again, $50.54. So we're holding this level for now, but for how much longer can we do that? Because the 20 EMA is kind of suppressing us down, and you're getting squeezed up over here. So this is sort of a descending triangle that you have going on here. And if I take a trend line here, let me just get a trend line and get that for you. So if we can get a target, what is happening right now? I can't get a trend line. There we go. If I get a trend line from there to there, and we assume that we're going to break down to there, then we have a target at roughly $45 here. So that is something that you have to keep in mind, right? You're in sort of a bearish pattern right now. The golden ratio is rejecting us at $54.13. There's the 20 EMA, there's this descending resistance trend line. So the price is being compressed and it's pushing us down. So I would expect a move all the way down here to $45 at least. That would be a very good dollar cost averaging point or price, in my opinion, and I would probably buy some more Egld. I have been stacking my bags with Egld, and if you want to get my trade alerts, then feel free to join in on Patreon. You do get low cap gems in there as well, video requests, technical analysis requests, market sentiment analysis, and a lot of more. So that's regarding this smaller Fibonacci retracement. Now, obviously, if we start losing the swing low here, you're going to start targeting these three extension levels, which is the 1.272, the 1.414, and the 1.618. Now, the 1.618 is our golden boy here because that's the technical target, and it's sitting at $36. Now, if we did see a strong capitulation, this is where I would expect the price to drop to $36. If we saw Bitcoin perhaps moving down to $17,000, $16,000, this would be very possible. So have your buy limit orders set up in advance, because that would be a very, very smart thing to do, because you never know when the drop is going to come, and you want to be prepared for both outcomes at all times. And obviously, if we start losing the low of this smaller Fib of the larger Fib retracement, then it's going to be invalid, obviously, and we're going to have to move the swing low lower. So for now, let's just stick with this Fib retracement, and we'll figure it out once we see how the markets play out. Now, jumping into the daily RSI. So in the last video, I did give you this green support trend line, and we had a very nice bounce off of it August 19th, August 18th, and then we saw a move to the upside from there. That was a 16% move. So you had a very nice swing trade opportunity. You could have bought in over here. You could have rode the wave up there, and you could have taken some profits, because as you can see, if we take a look at the price action from August 19th, you can see that you bounced from the 786 here, and based on the RSI, that was a good entry point, and you ran all the way into the 20 EMA. And as always, guys, in a downtrend, the 20 EMA is one of the strongest resistance lines you're going to have. So that was a pretty good trade, in my opinion. You could have taken that trade, made 16%, and if you wanted to buy back in, you had a 13% drop as well. So that is nice. And we almost had a second retest of this level, but I would keep my eyes on this green trend line, because in the future we could continue moving and bouncing from this trend line. We obviously dropped out of the channel up pattern that we were in. Also, this bottom green trend line is very important to have on your chart, because every time we reached that level, we had a move to the upside. So this is sort of a local bottom indicator for Egld. Okay, so keep an eye on this. And this is the daily RSI. You can draw all of this out on your own chart. Now let's move over to the Binance website. So I did say that we have a target to $36, which is where we started retracing from, which is this low, right? On June 13th, we printed this low, and we have a pattern that is suggesting that we could see a move to that price. And if you take a look at this Fib retracement, this is from the June low all the way to the August high, pretty much exactly what we had on the previous. Actually, no, I think that was a different Fib. I do apologize. So here, the golden ratio is sitting at $47.85. That's a great buy zone, in my opinion. And $43.33, another great buy zone. But essentially what you have here on the daily chart, if I zoom in a little bit, you can see that we do have a head and shoulders pattern. So you have a head over here. You had another head over here. Oh, you have the left shoulder, the head, and the right shoulder over here. Obviously, this is the neckline. And what we've done here is we lost the neckline, sort of retested it as a resistance, and now we're coming back down. And obviously, if you start closing candles below the neckline, that means you're in a technical target to the downside. And that target is measured based on the length from the top of the head all the way down to the neckline. And here, as you can see, let's consider this our breakout. Actually, no, this is our breakout here. So that would be $38 precisely. So that would be your technical target here. I do think this is within the realms of possibility. We could see a dump all the way down here, and that would be a very nice double bottom pattern, in my opinion. As you can see, you did start here a local uptrend. So you are allowed to find head and shoulders patterns in uptrends, right? But if you look on the global, or if you zoom out and you look on the big picture, you're in a downtrend, right? But the head and shoulders pattern involves only this fractal. So that's why it's a valid head and shoulders pattern. So you have your two shoulders, you have your head, you have your neckline, you have your target down here at $38. Let's see what happens. I'm definitely going to be buying more Egld if we get to these levels, and I'm going to send it into staking. There is a good app that I looked into. If you want me to do a video on Egld staking, then feel free to let me know down below in the comment section. Also here on the daily RSI, what I've noticed is that we do have a symmetrical triangle. Here I'm going to highlight the points of contact that we have. And right now we're holding the support of the daily RSI here, symmetrical triangle. If we lose this, we could start closing below that and hitting our head on it, eventually taking us down to the oversold. So yeah, if we lose this right now, that would be quite negative. But if we were to continue in this symmetrical triangle, the closer we would get to the apex, the more I would say the more probable the outcome would be that we would start breaking to the upside. But let's see, right? No one knows what's going to happen, guys. My motto is be ready for both outcomes. So if we start dumping, I'm ready to buy into that. And I would expect some sort of a move into November, right? We could see some sort of a relief rally, but I would not expect a bull market in, by the end of the year. So that's at least my opinion. Let me know what you guys think. If I missed out anything important on the chart, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon. Thank you all for watching. I'm going to catch you in the next one. Goodbye and good night.